Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update. And this is the third in a series of three that we're doing. This one we're going to focus on market crash 2010. And I'll start it off by saying Credit Suisse, who thought that the end of 2010 would be the next market crash, they're now guesstimating that mid-2011 will be the time. Obviously, it's really hard to predict the date. I kind of think we're going to see that in the fall, but that's a guess. There's loads of signs that this is going to happen and it's going to be severe, but it's really impossible to say exactly when. But we're going to run through some more signs for that. All of this are minute updates to the coming storm video that we did in November. If you haven't seen that, I highly recommend you watch that. There is a link right next to this video where you can watch that for free. And that's far more important than any of these small details because it gives the big picture of what we're facing. You are going to want to be prepared because your life is going to change drastically. So we're trying to help you to prepare for that, but I suggest you go watch that full context video. Jumping into it, the Fed is retaining regulators and retraining them in order to, instead of helping to find problems on bank balance sheets and get rid of problem situation, they are training them to keep these things on the books. So banks and commercial borrowers aren't going under, but what this is doing is exacerbating the situation. But they've changed the way regulators are looking at things out there. The Russell 2000, which is small cap, high beta type stocks, are outperforming the S&P by the widest margin since before the 2008 crash. So again, that's kind of a sign that a crash is coming. Just kind of interesting, a couple interesting stories I put in here. The LA court system is totally shutting down, not totally, but they're shutting down massive numbers of courtrooms. People are having a hard time getting in for court cases because there's just no money there. So some signs of some things that are going on out there. Greece, we talked in the prior video about the situation there. One of the reasons the big countries don't want Greece to go under is because French banks have $75 billion of exposure to Greece. The German banks have $45 billion of exposure. So it's not like they can just say, okay, Greece, you're going down and we're splitting and going different directions. Well, these Germans and French banks will lose a tremendous amount of money, which in fact has a huge impact on each of those countries, and that's why they want to save Greece. So they're in this tricky situation. It's the same situation we're in just as a country. Everything's a catch-22. The decision of the left is ugly, the decision of the right is uglier, and so that's where they are. It's going to be ugly. There's no easy way out for Europe. There's no easy way out for us. Let's see, the wine industry, there's a fascinating article I tweeted out. All of my bibliography is at Wes Bridle on Twitter. It's a pretty interesting article if you want to read it, if you're interested in wine. It just talks about the fact that all these winemakers are, and this is a microcosm, I think, of the whole economy, but all these winemakers are barely holding on. The banks haven't foreclosed on most of them yet, but there's no way they're sort of getting out of this situation. There is massive amounts of wine being stockpiled in warehouses right now because they can't sell it and they don't want to flood the market. But apparently, according to this article, it is going to happen. There will be most of the winemakers in California are going to be going out of business. The small ones are hurting, and even a lot of the sort of mid to major ones are too highly leveraged. And so only the most conservative ones, according to this article, are going to make it. You're going to see wine flooded on the market and wine a lot cheaper. So if you're a wine drinker, you'll get some cheap wine coming forward. Dylan Grice with Societal General said the price to earnings of the last 10 years ratio is extremely high, and so he expects, based on this and this work they've done in this, to expect 1.7% returns over the next 10 years. And I don't know if that number will be right, but it will be very volatile in the meantime. Bill Gross was a little more optimistic. He said expect 5 to 6%. But his point was the same. For people who are expecting 8%, 10% growth per year, Bill Gross, who was the greatest bond investor in the world, said you need to change your expectations. 5 to 6% is the max you should be thinking about. The good news of what he said is he feels like the real estate bottom is in this country. Congress estimates that 4 million people will have to buy health insurance or pay penalties under this new health care plan. That's a difficult thing for the economy when people takes money out of their pockets and has to go to health insurance or has to pay penalties. That's a difficult thing. Interesting thing about the world economy reorienting. I don't know that this fits in a market crash, but it's a sign of what's happening in the world economy and what we're going to see play out over our lifetimes. The U.S. has been the center of the world economy. It's changing over to Asia. And so, interesting stats here. Taiwan, 30% of their exports now go to China. These are generally countries that kind of hate each other because China considers Taiwan part of them and Taiwan considers themselves independent. But 30% of Taiwanese exports now go to China. South Korea, 25% of their exports go to China. Both of those numbers are double what they send to the United States. So their economies are now more reoriented on China than they are on the U.S. This is a big sign of things to come. The IMF proposed a new global tax on banks. I saw Canada was furious and wants no part of this, and that's interesting for a couple of reasons. For one, it's bad for us and the cost of doing business. If such a thing were to happen, it's also an outside organization getting control over American policy, which is a scary thing. Equity fund flows to emerging markets have now been up for 10 straight weeks. This is highly correlated when you see that with a correction. It could be minor, it could be major, but generally if funds continue to flow positively towards emerging markets, they need to usually take a breather. And so there's another sign that would happen. As I said in the last video of this type, I'm now of the opinion we're not going to see a correction until the fall, and then it will be a big one. But that's a total guess. My reason for that is we should have had a correction already, and we haven't. So I'm thinking that the market's being held up in certain ways, and that probably won't fall until something really big happens. Thank you for watching. If you haven't seen the Coming Storm video, again, I highly recommend you click that link, watch it for free, and we look forward to talking to you in the next video. Thanks, and God bless you.